Okay, let's take stock of the global handover from last night. America had a very turbulent session, 400 points down at open and another 400 points down in the futures. What happened over the course of the day is that this corrected and the Dow ended the day 225 points lower, but the futures are now showing a healthy bounce of around 130 points, indicating a fair bit of recovery. Now, what sent the market spiraling is that the Q2 GDP data for the United States came out yesterday, and GDP contracted by around 39.2%. So that's much higher than what estimates had initially put out, and that's what's kind of got everyone gripped by a bit of fear, given the kind of rally we've seen. However, there was a savior as well for the US markets, and they were the FANG stocks. Yesterday, you have the likes of Facebook, Apple, Amazon, Google, all having to report their earnings. And it was a stellar set of earnings from all of them, with major beats on rather large expectations. So that's what instantly triggered a reversal. And you saw the futures suddenly catch up, recover, turn green, go up 100 points. And now they're firmly in the 130-point range. And this has been led by the tech stocks. Specifically, Apple really shined out. They had a blowout quarter with sales growing 11% despite all the macroeconomic challenges. And they also did a 4-for-1 stock split, which should have investors fairly excited. As a result of this, the Nasdaq futures were also up, eventually 1.1%, and the S&P futures also climbed around 0.5%. So that was the US markets. If we come down to Asia and Europe, both markets are very rattled by the sharp contraction in US GDP. Specifically in Asia, now they'll be looking to China today for the PMI data, which is to be released at 9 a.m. And once that data is out, they'll have a better idea of how July has fared in terms of manufacturing activity. That is the one positive trigger that could carry Asian markets higher today. But until we wait for that, the shock of the US GDP still seems to be hitting them. The Nikkei slipped 0.62% in early trade. The Topix was down 0.7% in early trade. The Kospi slipped 0.2% in early trade. Australian ASX 200 dipped 0.9%. And the MSCI was largely flat. So markets in Singapore and Malaysia are closed, and Indonesia as well, for a holiday. So we have no cues coming out of there this morning. Then we come to Europe. The stock 600 was down 2%. Banking stock shed 4%. And then most sectors and major bourses were in the negative territory. So Europe was not feeling upbeat as well. Now finally, oil and gold. We saw a sharp retreat in oil. Oil prices nosedived 3%. They fell the second this GDP data came out. People panicked about the demand woes, etc. But over the evening, that also seems to have recovered slightly in the futures markets. Brent futures settled at just under $43 at 42.94, and WTI futures settled 3% lower, but at one point they were down 5% in the session. So there has been a sell-off in oil, sharp drop, but some sort of recovery there as well, mirroring what we kind of saw in the Dow post those GDP numbers coming out. Gold also, surprisingly, given all this volatility, finally seems to be retreating. It's been positively gaining for 9 straight sessions. That seems to be tapering off, but they're still hovering at a record peak prices. With that being said, they're set now to break the longest winning streak since December 2017. Futures closed 0.6% lower at 1942 per ounce, and spot 0.9% lower at $1952 per ounce.